We're back, traders, investors, with Greg Harmon, CIO and partner at Presidium Capital and founder of DragonFly. Greg, how you doing in this volatile market today?
I'm doing all right, but then I guess I've shifted my focus to be a little more longer term than a day trader.
Yeah,
So,
good advice. We talk about that a lot. So, tell us about your new book and your two businesses that you're running now.
sure. Well, the book is really about my process. It's written in four parts. The first part I just noted this morning in an article I wrote that the first part is just talking about the major trend in the market. And for most people, most traders, if you know the major trend in the market, that's 80% of the battle, because 70–80% of the stocks move with the trend. So that's the first part. The second part talks about all the different technical analysis tools that I use, and the third part brings in an options overlay on that. So looking at using options from a technical perspective to set up trade ideas, both short-term and long-term. And then the last part is really about position sizing, risk management, execution. So practical applications of all that analysis and theory.
Okay. So we're talking trends here, and there's no doubt you can't even convince me that the longer term trend is not up in this market and has been for several years. And not really many sell-offs here for people to get into the market. So we can agree that the trend is up here. What are you looking at things from a technical basis to determine that we're in a downtrend, a fundamental basis? What would make you change your mind about the longer term trend in the market?
Yeah, for me, it would be a major change in the technicals. As you said, I agree with you. The major trend is up. The intermediate trend has been a bit sideways, with some of the indexes leaking to the upside a little bit. But it would take a break of a major support level to take us down to where I believe that the trend has changed. Taking, for example, something like the IWM, where it had a long run higher, if you squint at your chart or look at something longer than the daily chart, maybe a weekly chart, it's really just moved between 107.50 and 120 the last 4 months. So if you just take a look at that and say, okay, the intermediate trend is sideways, it would take a breakdown probably to 105 to convince me that the market has changed trend and is in a sell-off mode.
Okay. All right. So do you use the IWM as a benchmark then, as opposed to the S&P 500?
I don't. I know that there are a lot of traders that are looking at the smaller cap indices and smaller cap stocks to get that. So I use that for your example there. But for me, it is mostly the S&P 500.
Okay.
I think that that's a good reference for what's going on with the dividend world, with the large cap world, and with those stocks that are traded by institutional investors.
Okay, so
you look at that market, and maybe we need to get below 190 before that signals that we might be turning lower.
Okay, so that you're looking at basis the spider. You also touched on an interesting topic here, trading options using technical analysis. So could you just, give us a stock and a potential setup maybe that you're looking? Are you using weekly options? Are you going a little bit longer term? First of all, what time frame, and then if you could give us an issue and then a possible setup scenario.
Yeah, sure. If you look at something a bit longer term, I will do both short and long-term trades.
Okay.
But the short-term trades are mainly things that I'm doing for event-driven activity. So I do trade options for earnings. And there I will look for the shortest type of option trade that I can do. But if you take a look at something like, we got into iRobot this week. I want to move over 39. The technical setup for that stock saw that that could be a nice breakout level.
Okay, so
And
will you use the shorter term options on something like this, or will you give yourself a little more
something
time?
like that, I see that it's had a lot of volatility. It's got kind of a range to break out between 38 and 39. And I want to take advantage of giving it some time to move back up to maybe the top of the range it's been in, around 48,
Wow.
46, 48 area. So I went and just a simple trade, just went and bought some calls.
Yeah,
Just
there's
July 39 calls on that.
yeah,
So
there's
you can look at that as almost just like a stock replacement strategy.
yeah, not enough volatility or premium in there to really, would you consider selling puts to get into the position so you can take advantage of a little, time decay, or you just I mean, with the low volatility and the low prices, you just prefer to just go with outright calls.
With the stock that's rising, I prefer to go with just outright calls. And the trend in that short term has been to the upside. One that fits your bill there is Conagra, ticker CAG.
Yeah, what do you think about
That
this
stock
one?
actually reports tomorrow and has been in a good downtrend after pre-announcing. But that's one I think that is a good candidate for selling maybe the 28 puts as an entry into the stock ahead of earnings. People think that they've already pre-announced and it's not going to move much, but those stocks still tend to move a bit on earnings as well, and selling the 28 puts as an entry might be a good opportunity there.
Someone's definitely making a stand here at 2870 level. Last three lows between 2867, 2871. Do you put a lot of stock into double tops and double bottoms, triple tops, triple bottoms? Is that part of your technical analysis?
Yeah, that's definitely part of it. I trade off of what I call a mosaic view. So I'll look at the classical technical things like horizontal resistance and support, but I'll add in Fibonacci's on top of that. I do look at harmonic patterns as well, and your Japanese candlestick patterns.
Okay.
So, Conagra looks like a classic in the Japanese candlestick pattern. You've got a strong move lower that might be confused with something called the three black crows, but there's gaps between each of those, which indicates that there's some exhaustion in the selling there, and you're seeing that now as you're getting real tight body candles at the 2870 level.
Okay, so
adding a more classical view to it, it's also been outside of Bollinger Bands and just starting to get back inside them. So volatility is saying that it should have stopped there as well.
okay, are you doing any investing in Apple? Is that in your portfolio at all?
Apple is not one that I follow.
How
I
come?
tend to find that stocks that are a little bit less broadly followed behave with the technicals a little bit better.
Okay, yeah, that makes sense. That not as much competition there. So, okay, all right. Well, Brianna, are you gonna do the trivia here from our interview with Greg? Should we keep him on for that, or how do you want to do it?
We can do the trivia later in the show after the headlines.
Okay.
We'll let Greg go, or we can keep asking.
Okay, no,
questions.
just a few more. If we got any questions coming out of the chat room for Greg here regarding any individual issues, please put them in there. We're going to have Greg on here for another few minutes. So, I know you're trying to take a longer term perspective, on the market, using the large cap stocks. So, you're just interpreting, the sell off that we had yesterday and the follow through today is just something that's just a normal part of the markets, and you're willing to ride the storm out.
Yeah, I'm willing to ride the storm out. I wrote about it this morning on my blog at dragonflycap.com. But I'm not oblivious to the fact that any given day the correction could turn into something that's major. So I've got options protection in place. I put collars on bigger positions, and I've got stop losses on those that don't fit with the option strategy.
Do you keep some black swan options in there, or are you just pretty much just
No, not that's not something that I do. But things like a large cap stock like Johnson & Johnson, where I've got a position and I will buy a downside short-term put spread and sell upside calls to fund that to get over the short-term volatility.
Okay, definitely a lot of different strategies to use in the markets here. Greg Harmon's been on the line, CEO and partner at Presidium Capital and founder of DragonFly. Greg, thanks for coming in and giving us a little bit longer term perspective on the market. I think it's always good to hear from different people and different trading strategies.
Thanks for having me, Joel.